hope it's working. There we are. Hey, Lydia.
Got it. Hey,
Now
Sarah,
I
how
can
you
see
doing?
you.
How you doing?
Doing great. How about you?
I'm good this last week of 2021.
Barely last few days, no doubt,
Last
right?
few days, yes.
And all I can say about this year is it was not what we expected.
It was not. It's been a very interesting, good and bad. It's been very interesting.
It's been very interesting, and it continues to keep us on our toes. You know, Lydia and I were just talking about where we are, what's happening, and what are the forecasts saying. And what's really interesting is a lot of the forecasts were saying, hey, we're going to have our increased interest rates. We're going to have increased inventory. Things are going to get more normal. So all of us were like, yeah, things are going to get more normal. But that's not exactly what's happening. So it is normal for inventory to decline this time of year, but it's not normal for it to like fall off a cliff. And that's what it's done. And demand has stayed unseasonably high. So, you know, what happens when you have a low supply and high demand? Prices
go up. Yep.
So all the stuff of, you know, saying we might see, I've seen, you know, different forecasts of a 3% appreciation next year, 6, 5, 7, you know, we just had a 30% appreciation. You know, 2021, we saw 30% in Greater Phoenix. In 2020, we saw 18%. And, you know, nobody wants to have that kind of, I mean, well, okay, fine. Sellers want to have that kind of appreciation.
Right.
But,
depends on where you are in the market.
Yes, where you are. But at the same time, you know, we really want to have that healthy market that allows people to come in easily. You know, when you have 25,000 houses on the market, awesome. But right now we have like 4,000. And so that is very difficult on a population of 5 million people that's growing. So we're looking at, you know, we've got, and Lydia was talking about, you know, she's got somebody, you know, one of her buddies that was like, shoot, you know, I want to get back into this market.
They can't. Yeah.
And that hurts.
And the thing of it is we still have high demand. So it's not like,
staying.
Yeah, it's staying. And it's not everybody's coming from California like everybody thinks they are. We have so many people coming from so many different areas of the country. It's crazy.
All over. And they're going to continue. We've got a lot of job growth. And, you know, if you have good jobs and a population, your housing is going to be healthy for the most part. You know, because people will be coming in and it'll bring that demand. And we're running about 23% above normal for this time of year. So that's really, that's really unusual. Typically, I want to say in 19, in a really hot market, end of 19 going into 20, we had like a 4% above normal demand right at this time of the year, because it's just not a huge demand time of year, except for right now. And that's where a lot of analysts, a lot of experts are saying, you know, we're going to have bigger appreciation because of supply and demand. We're going to have, and the question is 22 going to look like 21 or 19? Because if it's like 21, that means inventory is going to keep dropping till April. But if it's like, you know, even early 2020 when it was still normal, or early 19, we started seeing an increase in January. So, you know, a lot of us are just kind of crossing our fingers, hoping for the best, but forbearance is not turning into leading to a lot of new listings. And one reason too, is anybody who sold in the last 10 years, a lot of them ended up, or not sold, but who bought a house, ended up keeping their previous house as a rental. So that removes, you know, potential inventory, because we have so many people with multiple properties. And the thing is it makes sense. People, you know, rents have gone like this. They can't do that forever, but, you know, we've got to get control of having some homes available for our buyers. And, you know, I know this year, 2021 is going to turn into a record-breaking year for resale closings. Beating 2005, which was the previous record for Greater Phoenix on sales. In nationwide, I found this interesting. Nationwide, it's 2006 is the record, but in Arizona, we like to do it quicker. We do everything first. So we hit our numbers in 05, but anyhow, we're beating that. And, you know, some of it is so much of that demand that we're seeing. And Lydia, I know, I mean, what were you just telling me about how many inspections you're seeing? And
So, there for a while, I wasn't seeing hardly any. Like beginning of this year till about August is when I saw, there were quite a few inspections. And then August, it kind of dropped off. August, September timeframe, it kind of
right.
dropped off again.
And
then
we thought things were going to be seasonal.
Exactly. And then October, November timeframe, I started seeing some inspections, not crazy amounts like I had been earlier in the year. Well, then come to find out I'm going to say the last 3 weeks, literally since December, I have been going like a crazy person doing inspections. I've literally had inspections every day given to me, probably anywhere from 8 to 10 again, 8 to 10 a day.
That's a lot.
It's a ton. And I will tell you, the majority of them are iBuyers. Again, because the few homeowners that I do see when I do the inspections, either will tell me that they've sold it to whoever they sold it to, and they're all iBuyers, right? So, what I think is happening is they are starting to purchase again, and they are definitely going to go back on the market, hopefully to help that inventory. But I'll tell you this, the iBuyers are really smart and educated and understand the market. They keep tab on stats probably just as much as you, Sarah, or more.
Probably more.
So I don't see them buying them and throwing them all back on the market. They're going to watch the market because they want that. They want the supply and demand to be, they want the sellers to be able to basically
Make
get top dollar, because at that point they're sellers, right? They're buyers and they're sellers, but they get the buyers at the low end, and they know when to get those buyers, and they know who to target. Someone with high equity that maybe needs to move out of their area quickly, and they're also accommodating. A lot of those iBuyers are willing to allow the homeowners to sit in their properties and rent back to them for a month to 6 months, 3 months, whatever that time frame is. So they know what the families need, and they are basically giving them what they need. So when they go to turn around and turn them back on the market after the first of the year, I don't think we're going to see a flood of properties back on the market. I just don't see it.
And that, a lot of things, it takes 3 weeks to see a trend. And so I think that, this is like the early parts before the trend is formed, but talking and having these conversations and watching it this closely, it makes a difference. And they're doing their homework. And, we know that buyers and sellers are doing their homework, and we just want to provide really good, really current content and information to help make good choices.
Right. And just by working with a servicing company myself, I even see trends before they even get out there. So it's been an interesting year for myself, just to see who's buying, what's buying, how many people are, whether they're, being thrown back out there or not, or whether they're being held or not. It's been an interesting year for sure. So, I think next year is going to be a very interesting year as well, especially if we have this extremely low inventory. I mean, we've had extremely low inventory the last couple of years, and we've talked about that. But you had mentioned earlier today, Sarah, it's stupid low.
Yes. It is. It's stupid low. This is
stupid low inventory. So
it's pretty tight.
Yeah. So if you are a buyer, that's not a good thing, and if you're a seller, that's a great thing. So it'll be interesting what we have to deal with in the real estate industry this next few months, because it's not just inventory. It's the concern of interest rates are possibly going to be going up sometime in spring, you know, so you would think with the potential of higher interest rates, say sometime March, April timeframe, like they've talked about, buyers are going to get out on the market like starting January 1st, trying to go look for homes. And if everybody does that if everybody jumps off the fence at the same time and we don't have inventory, that's going to cause more problems.
And we could see another, I don't want to say another 30+%, you know, appreciation year. This has been a really big year, but even 20% is big, 15% is really big. You know, taking and putting it into perspective. I actually want to add one quote that I read today, and it's actually a quote by Tina Tambor. And she said, and it's about what sellers and what we're all used to because of this kind of insanity, is she says, you know, however, after 18 months of an extreme seller market conditions, anything less than sheer lunacy will make it feel like the sky is falling. So while we're talking about how, you know, what a healthy market looks like, it's gonna feel real weird. You know, it's gonna feel like that sky is falling when ultimately it is a healthier environment because we need our buyers to be able to afford houses for the sellers.
Absolutely. Yep, that is true. So we will keep everybody informed this next 2022.
Yep.
And it will be, there's a lot to talk about for 2022. So
there's a lot to talk about. So I am just so glad that, you know, we got to spend this time today. Lydia, thank you for squeezing me in before the end of the year. And we got a lot to talk about in January.
Thanks, Sarah. I appreciate you too.
Thank you. Happy New Year.
Thank you. You too. Have a wonderful holiday.
Bye.
Bye-bye.